Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello, hello, hello. This is Roshonda, agency owner of the Isom Insurance Group here in the sunshine state of Florida, back again with another Quick Bite episode. Today is Saturday, August the 1st, 2026. And today's episode is going to be a bit different from our usual quick insurance market updates. It is also going to be a longer than our normal episodes that I usually record because this subject deserves time, care, and a thorough explanation. It is also, we are going to discuss the tragic passing of Nolan Xavier Wells and use the circumstances surrounding this boating related tragedy to explain the many different ways insurance can become involved after a person is seriously injured, disappears, or passes away during a recreational outing. Before we begin, I want to be very, very, very clear about what this episode will not do. We will not speculate about what happened. We will not accuse anyone of any type of wrongdoing. We will not repeat rumors as facts. We will not attempt to solve an active investigation during this episode. We will not discuss the controversy surrounding the case, and we will not make race the focus of this episode. The investigation remains active. Several important facts remain unknown, and the people involved deserve fairness while the family deserves answers. Nolan Wells' family also deserves for his life not to be reduced to social media arguments, internet theories, or careless speculation from people who were not there. This episode is strictly an educational discussion about insurance. We're going to talk about boat insurance, watercraft liability, homeowners insurance, renters insurance, medical payments coverage, umbrella insurance, life insurance, accidental death benefits, claims investigations, wrongful death claims, evidence preservation, search and rescue expenses, legal defense coverage, safety planning, and what boat owners should review before passengers before taking passengers onto the water. The purpose is to help families understand what insurance may do after a tragedy, and just as importantly, what insurance cannot do. Insurance can help pay certain covered expenses. Insurance can investigate claims or will investigate claims. Insurance can provide attorneys. Insurance can compensate injured parties or surviving family members when legal responsibility is established. Insurance can provide financial support through life insurance benefits, but insurance cannot replace a person. It cannot erase grief. It cannot restore a family's sense of safety, and it cannot provide emotional closure simply by issuing a check. This is a serious topic, but I will still explain it with the same plain English style we use every week. There will be a little humor along the way because insurance policies sometimes require humor just to get through the definition section. However, the humor will be directed at insurance complexity, not the tragedy or the people involved. With that understanding, let's begin. What we know and why we must be careful. Nolan Wells was an 18-year-old college student athlete who traveled by boat with friends to Horn Island, a barrier island located off the Mississippi Gulf Coast during the 4th of July weekend. He did not return to the mainland with the group. Authorities have continued investigating the circumstances surrounding the disappearance and passing. An independent autopsy commissioned by his family reportedly listed both the cause and manner of his passing as undetermined pending further investigation. The available findings were not sufficient to establish precisely how he passed away or to completely rule out non-accidental factors. That uncertainty is extremely important from an insurance standpoint. Insurance companies do not generally determine coverage based solely on what people believe may have happened. They evaluate evidence. An insurance company may review law enforcement reports, incident reports, witness statements, autopsy findings, toxicology results, photographs, videos, phone records, text messages, vessel registration information, GPS information, weather conditions, water conditions, safety equipment records, ownership records, medical documentation, policy language, and relationship between the people involved. So a lot goes into it. The carrier may also examine exactly when each person arrived, when each person left, who operated each boat, who was assigned to each vessel, who was the last known to have seen the missing person, and what efforts were made to confirm that everyone returned safely. That does not mean insurance companies replace law enforcement. By no means. An insurer is not responsible for deciding whether a crime occurred. All the insurance company is going to do is all they're doing first, they have to determine whether a policy was enforced. They have to go through the conditions, exclusions, everything about the policy. So they need to know what happened to see if the incident qualifies for coverage. Its role is to determine whether a claim falls within the terms of the insurance contract and whether an insured person may have a legal obligation that the policy covers. In other words, an insurance adjuster cannot responsibly say, I saw 3 social media posts, watched a 55-second video, and read 200 comments, so I think I have this figured out. No. That is not how claims are handled. That is internet detective work with the company laptop, basically. A proper insurance investigation requires verified facts. It requires documents. It requires statements. It requires timelines. It requires policy review. And sometimes it requires patience while other agencies complete their work. That patience can feel extremely difficult for a grieving family. When someone you love is gone, every day without answers may feel unreasonable. However, a carrier that pays or denies a claim before obtaining the necessary information can create even more problems. A rush decision may be wrong. A wrong payment could go to the wrong person. A premature denial could harm someone who is entitled to benefits. A carrier may therefore keep a claim open while requesting additional documentation. That delay does not automatically mean the insurance company is refusing to help. It may mean the company cannot yet determine which coverage applies or whether the available facts satisfy the policy requirements. Why more than one insurance policy may be involved. Whenever someone is injured or passes away during a recreational boating trip, people often have one simple question: whose insurance pays? The problem is that there may not be one simple answer. Several policies may potentially become relevant, which can muddy things up really bad, because then it becomes who's primary, who's assessed, who's primary coverage, who's secondary coverage, and then which way and what percentage. Sometimes it could be a pro rata percentage, it could be full. It can get really, really messy. Several policies may potentially become relevant. The boat may have a separate watercraft policy. The boat owner may have homeowners policies. The operator may live in a household with the homeowners or a renter's policy. The owner may have a personal umbrella policy. The operator may have a separate umbrella policy. There may be medical payments coverage under the boat policy. The person who passed away may have an individual life insurance policy. There may be group life insurance through an employer, school, association, union, or other organization. There may be accidental benefits or dismemberment coverage. There may be travel accidental benefits. There may be benefits through a financial institution, credit card, membership program, or student program. There also may be legal claims against the individual, business, boat owner, vessel operator, event organizer, property owner, rental company, marina, or another party, depending on the verified facts. The existence of a policy does not automatically mean that money will be paid. Coverage depends on policy language. It depends on who qualifies as an insured. It depends on who owned the boat. It depends on who operated the boat. It depends on whether the operator had permission. It depends on whether the boat was used privately or commercially. It depends on the cause of injury or the passing away or of the person. It depends on whether negligence can be established. It depends on whether an exclusion applies. It depends on whether the policy was active. It depends on whether the boat was properly disclosed. It depends on whether required premiums were paid. It depends on whether the loss occurred inside the policy's navigation territory. It may even depend on whether the vessel had been modified since the policy was issued. That is why insurance questions in a case like this cannot be answered by saying there was a boat, so the boat insurance pays. Insurance is rarely that simple. If it were that simple, policy contracts would be 2 pages long instead of arriving with enough paper to qualify as a light furniture piece. I always tell my customers like that, your policy booklet is usually minimally about 50 pages. It's usually more. So it's like a book. It's a policy booklet. And I tell customers, just read it in your spare time before going to bed because it's so detailed. There's so many conditions, there's exclusions. So it is a lot. And that's what a licensed claims representative has to go through before they can determine what coverage and how it pays out a policy. The first policy to identify in this case is boat insurance. The first policy an attorney, investigator, or claims professional may look for is a separate boat insurance policy. Boat insurance is sometimes called watercraft insurance, marina insurance, recreational marina insurance, or yacht insurance, depending on the type and size of the vessel. A typical boat policy may include coverage for physical damage to the boat that can help the hull, motor, permanently attached equipment, navigation equipment, and sometimes the trailer. That's what's included in that. The policy may also provide liability coverage. Liability coverage is a portion that may respond when an insured person becomes legally responsible for bodily injury or property damage involving the boat. Some boat policies may also include medical payments coverage, uninsured boater coverage, towing coverage, wreck removal coverage, fuel spill liability, personal property coverage, fishing equipment coverage, emergency assistance coverage, or coverage for newly acquired vessels. Not every policy includes every one of those protections. Some must be added, like by adding an additional endorsement. Some have separate limits. Some have deductibles. Some are limited to particular circumstances. Some may sound broad until you reach an exclusion that begins with the phrase, "we do not cover." That phrase has in it many people's good moods. The liability portion of a boat policy may apply when an insured person is accused of causing injury or the untimely passing through negligence of a person, untimely passing of a person through negligence. The company may investigate the allegation. It may hire an attorney to defend the insured. Let me stop right here. Sometimes people get confused. They really think that the person is suing the insurance company. That is not the case. The insurance company is protecting the insured, but the person that's bringing the claim is suing or presenting the claim against the person, not the insurance company. The insurance company, just by definition of the policy, has the obligation to provide an attorney for the insured and will pay up to the policy limits if the insured is liable or there's coverage for that particular incident. So that a lot of people get confused. They always think like, oh, they're suing my insurance company. No. They're suing you, the insured, the person. So when that whoever is bringing the claim is filing that claim or decides to sue, that lawsuit is going to say, a person A is suing person B. The insurance company will never be listed there, unless some circumstances, but a lot of times it's always the person bringing the claim is going after the insured. The insurance company just provides the coverage, and by the means of the policy has to provide an attorney for the insured. It may negotiate a settlement. It may pay a judgment up to the policy limits. It also may pay certain defense expenses according to the contract. However, liability coverage is not the same as an automatic accidental benefit. However, liability coverage is not, again, automatic. A person does not necessarily receive the full liability limit simply because an injury occurred on or near the boat. There usually must be a legal basis for holding an insured person responsible. That distinction matters. Imagine that a passenger becomes ill because of an undiagnosed medical condition while riding on a boat. The fact that the illness occurred during the trip does not automatically make the boat owner negligent. Now imagine that the operator ignored dangerous water, failed to provide required safety equipment, operated recklessly, and caused a collision. That creates a very different liability analysis. The location may be the same, the outcome may be serious in both examples, but insurance coverage depends on what happened and whether the insured had a legal duty that was breached. A legal duty that was breached. Because we will use the word negligence several times, let's explain it in plain English. Negligence generally means that someone failed to use reasonable care under the circumstances and that failure caused injury or damage. A negligence claim often looks at four basic ideas. Was there a duty? Was that duty breached? Did the breach cause the injury? Did the injured person or family experience legally recognized damages? I am not offering a legal opinion about this case. By no means. Not an attorney. I am explaining the general framework that often appears in liability claims. In a boating situation, a vessel operator generally has a responsibility to operate the boat reasonably and safely. That may include maintaining proper lookout, following navigation rules, considering weather and water conditions, operating at an appropriate speed, avoiding intoxicant operation, ensuring required safety equipment is available, and responding appropriately when a passenger is in danger. A boat owner may also have responsibilities. The owner may need to maintain the vessel. The owner may need to ensure the boat is seaworthy. The owner may need to avoid giving control of the vessel to someone who is obviously unqualified or unsafe. An event organizer may have responsibilities depending on the arrangement. A rental company may have duties related to maintenance, safety instructions, or operator qualifications. A marina may have obligations involving premise or equipment under certain circumstances. Again, none of those general examples should be treated as a claim that any person or organization did anything wrong in the Nolan Wells case. There are examples of the issues an insurer may examine after a serious recreational boating incident. Insurance companies look for facts, not that connect an insured person's conduct to the loss. They do not pay liability claims because people are sad, angry, or suspicious. Those emotions are understandable, but liability coverage requires a legal analysis. One of the first practical questions is who owned the vessel. That answer may sound easy. Sometimes it is not. The registered owner may be a parent. The boat may be titled in the name of a business. The boat may belong to a relative. The vessel may have been borrowed. It may have been rented. It may have been purchased recently but not yet added to the policy. It may be co-owned. It may be held inside a limited liability company. The insurance policy may be in a different name from the registration. Those details can affect coverage. Suppose a father owns a boat but allows his adult child to use it. The father is the named insured. The adult child may qualify as an insured household member, depending on where the child lives and how the policy defines a resident relative. Now, suppose the adult child moved out several months earlier but continued regularly using the boat. The policy may treat that situation differently. Now, suppose the boat was titled to a business but used for a private outing. The carrier may ask why the business owned the boat and whether it was insured for the correct use. Now, suppose the vessel was rented. The owner's insurance, the rental company's insurance, the renter's insurance, and any optional protection purchased at the time of rental may all need to be examined. The owner's identity helps determine which policy should be located. It may also determine who had the authority to permit another person to operate the vessel. The identity of the operator can be crucial. A policy may provide protection for the named insured, but it may also cover a spouse. It may cover a resident family member. It may cover other people operating the vessel with the owner's permission. However, policies differ. Some policies restrict coverage based on the operator's age. Some consider boating experience. Some question whether the operator completed a boating safety course. Some require regular operators to be listed. Some exclude specifically named individuals. Some limit coverage when the operator does not hold a required license or identification card. Some policies impose higher deductibles or restrictions for younger operators. Some may not allow anyone under a certain age to operate the vessel without supervision. Imagine that a parent owns the boat but allows an adult child or friend to operate it. The boat is insured, but the company still needs to know whether the particular operator qualifies for protection under the policy. The answer may be yes. It may be no. Or it may require 27 minutes on hold while the agent searches for an endorsement written in font size designed for ants. That's that little, the little fine print. This is why boat owners should always question their agent in advance who is permitted to operate the vessel, and also disclose anyone that may operate the vessel. In this incident, we're talking about a boat vessel, but this can be for auto insurance as well. You always want to disclose any potential drivers. Do not wait until after an accident to discover that the person regularly driving the boat or your boat was never listed or did not meet the policy requirements. Also, do not assume that occasional permission and regular use are treated exactly the same. A policy may be more flexible for someone who operates the boat one time and was never listed or did not meet the policy requirements. Let me go back over that. Do not wait until after the accident to discover that the person regularly driving your boat was never listed or did not meet the policy requirements. Also, do not assume that occasional permission and regular use are treated exactly the same. A policy may be more flexible for someone who operates the boat one time with permission than for someone who operates it every weekend but was never disclosed. Insurance carriers price policies based partly on the people who regularly control the risk. If the company believes one person is operating the vessel, but another person is actually using it most of the time, that mix match can create problems. Yes, it can create a lot of problems. Permissive use generally refers to someone operating the boat with the owner's permission, but even permission can raise questions. Was the permission direct? Was it implied? Did the owner give broad permission to use the boat whenever desired? Did the operator exceed the permitted use? Was the person allowed to use the boat but not allowed to take passengers? Was the person permitted to operate during daylight but not overnight? Was the person allowed to use the vessel locally but traveled outside the approved navigation area? Did the person have permission to operate the boat but then allow someone else to take control? Coverage disputes can arise when the facts do not fit neatly into a yes or no answer. And we know a lot of times when it comes to claims, it's never yes and no. It's always some gray to it. The family member then allows, for example, suppose a boat owner tells a family member, you may take the boat out this weekend, but do not let anyone else operate it. The family member then allows a friend to drive. The friend's status under the policy may be disputed. The friend had permission from the family member, but not necessarily from the owner. Whether coverage exists may depend on the policy language and the facts. This is one reason recorded statements become important. The carrier may question the owner what permission was given. The carrier may question the operator how they obtain access to the boat. The company may require those statements with text messages, witness accounts, or other evidence. When people give inconsistent answers, the investigation becomes longer. Some people assume their homeowner's policy automatically covers every boat they own. That is a dangerous assumption. Dangerous. A homeowner's policy may provide limited property or liability protection for certain small watercrafts. However, larger boats, faster vessels, personal watercraft, jet skis, higher powered vessels usually require separate insurance. The exact Homeowners coverage may depend on the boat's length, motor type, horsepower, ownership, and use. A homeowner's form may provide limited coverage to a small boat while it is stored. It may cover certain low horsepower vessels. It may provide a short period of automatic coverage for a newly acquired watercraft. It may contain limited liability exceptions for specific categories of boats, but those provisions often are narrow. For example, a homeowner's policy may cover a small, low-powered fishing boat, but exclude a high-performance speedboat. It may cover a small sailboat, but not one above a certain length. It may cover a boat that the insured owns, but treat a rented watercraft differently. It may exclude liability when the vessel is used to carry passengers for a fee. It may exclude business use. It may exclude racing. It may restrict coverage when the boat is rented to others. That means the words, "I have homeowners insurance," are not enough. The important question, does my homeowners policy cover this specific boat with this specific motor being used by this person in this location under these circumstances? Insurance has special talent from turning one question into six. Always. It's never just one question. It's never just one. But those details matter. A homeowner may see a boat as a weekend recreation. The insurer sees horsepower, operator experience, passenger exposure, navigation territory, risks, collision risk, storm risk, and possible injury severity. The carrier is not trying to ruin your weekend. It is trying to price that risk correctly. Now let's talk about renter's insurance. Renter's insurance may also contain certain limited personal liability protection. A person who does not own a home may assume there is no possible household policy to review. However, a renter's policy may cover certain personal liability claims subject to watercraft exclusions and exceptions similar to those found in homeowners forms. Again, the size, horsepower, ownership, use of the vessel may determine whether coverage exists. A renter's policy is not a substitute for a proper boat insurance policy, but it should still be identified and reviewed if an insured person is accused of negligence. This is particularly important for younger adults because, like, a lot of college students may still qualify as a resident relative under their parents' homeowners policy in some circumstances. Another student may have moved permanently and no longer qualifies. One student may have a renter's policy for an apartment. Another may have no personal liability policy at all. Resident status can therefore become important. Insurance definitions of household membership does not always match how people describe their living arrangements casually. A parent may say, "That is still my child and this is still their home." The policy may question where the child primarily resides, where belongings are kept, where mail is received, whether the absence is temporary or whether the student intends to return. That is why claims involving young adults sometimes require additional documentation. And that mail question, even for homeowners or renters coverage questions, whether a person is covered, that question can also determine whether a person is covered under an auto insurance policy as well. So don't just limit your mind. So always it's best to flesh this stuff out and just get a renter's policy. It's very inexpensive, just to provide extra layers of coverage. A boat policy may contain medical payment coverage. Medical payments can help pay certain medical expenses for insured person or passenger injured in connection with the boat. regardless of who is legally at fault, subject to the policy terms. This is a big thing. Medical payment coverage does not care about liability. You can pierce medical or get medical payment coverage no matter who's liable for an incident. So that is a big differentiation between liability coverage and medical payments coverage. This coverage is usually limited. The policy may provide $1,000, $5,000, $10,000, or another amount. It may apply to each person or each accident depending on the contract. Medical payment coverage is designed to address immediate expenses. Immediate. So that's why I say it doesn't matter about liability. Medical payment coverage is therefore to take care of medical expenses that are immediate. It is not usually intended to cover the complete financial impact of a catastrophic injury or passing away of someone. In a fatal incident, medical payments coverage might potentially address eligible ambulance services, emergency room treatment, resuscitation attempts, transportation expenses, or certain final medical bills. Whether funeral expenses are included depends on the policy. Some forms may provide limited funeral benefits, others may not. Medical payments generally does not require proof that the insured was legally negligent. That makes it different from liability coverage. Imagine that a guest slips while boarding a properly maintained boat and needs stitches. There may be no clear negligence. Medical payment coverage might still help with eligible expenses. Now imagine that the person suffers severe injury because the operator acted negligently. Medical payment coverage may provide a small, immediate benefit while the much larger liability claim is investigated separately. The medical payments limit does not normally reduce the emotional seriousness of the injury. So it doesn't matter how significant the injury is. Like I said, that medical payment coverage can be just immediate. It simply reflects that this coverage was designed as a limited first layer, not the final answer to every loss. Another coverage boat owners should understand is uninsured boater coverage. This coverage may help when an insured person is injured by another boat operator who has no liability insurance or insufficient insurance. The exact name and structure vary by carrier. Some policies call it uninsured watercraft coverage. Some include underinsured boater protection. Some require it to be added. Imagine that another vessel strikes your boat and causes serious injuries. The other operator is clearly at fault but carries no boat insurance. Your own uninsured boater coverage may become important. The coverage may help compensate for injury, for eligible bodily injuries subject to the policy limit and conditions. This is similar in concept to uninsured motorist coverage on an auto policy. Although the details are not identical, in a case involving a disappearance or passing away without a known collision, uninsured boater coverage may not be the central issue. However, it is an important part of a complete boating insurance review. Many people insure the boat itself, but pay less attention to what happens when the injury is caused by someone who cannot pay. A shiny boat can be repaired. A serious bodily injury may cause lifelong financial consequences. Take a little sip of water. When a person disappears during a boating trip, search and rescue operations may involve local law enforcement, marine patrol, emergency management, wildlife agencies, volunteer organizations, or the United States Coast Guard. Families may assume that boat insurance pays every cost related to the search. That is not necessarily true. Certain boat policies provide towing, emergency assistance, wreck removal, salvage, or recovery coverage involving the insured vessel. Those protections generally focus on the boat. For example, towing coverage may pay to tow a disabled vessel back to shore. Wreck removal coverage may apply when the insured boat sinks and the owner is legally required to remove it. Salvage coverage may apply when extraordinary efforts are needed to save the vessel from damage. Those are different from the cost of searching for a missing passenger. Public agencies may perform search and rescue operations as part of their governmental responsibilities. A family may also hire private search teams, investigators, divers, attorneys, experts, or transportation services. They may incur lodging expenses, travel expenses, missed work expenses, document fees, independent autopsy expenses, or costs for preserving evidence. Those expenses are not automatically covered by a boat policy. Insurance pays what the contract promises. It does not become a general emergency fund for every cost created by tragedy. That distinction can feel harsh. A family may reasonably think this happened during an insured boating trip, so why is every expense not covered? The answer is that insurance divides risk into categories. Boat physical damage is one category, liability is another, medical payments is another, life insurance is another. Private investigator expenses may fall outside of all of them unless a particular policy specifically includes such benefits. Boat owners should also understand wreck removal and environmental exposures. If a boat sinks, the owner may be legally required to remove the wreck. The vessel may create a navigation hazard, fuel or oil leak into the water. Government agencies may require cleanup. The cost can be significant. Some boat policies include wreck removal coverage. Some provide fuel spill liability. The limits may be separate from the main liability limit. Others may include these expenses within the overall limit. So the fuel liability may be included in the regular liability coverage limit. This matters because the cost of removing a vessel or cleaning up fuel can reduce the amount available for other claims if the limits are shared. For example, suppose a serious collision creates bodily injuries, boat damage, and a fuel spill. If all expenses draw from one liability limit, the available coverage may be divided among several competing claims. A $300,000 limit may sound substantial when someone is shopping for insurance. It can feel much smaller after a catastrophic accident involving multiple people, environmental cleanup, legal defense, and property damage. Insurance limits often look large until the loss is larger. A personal umbrella policy may provide additional liability protection above the limits of an underlying homeowner's auto or boat policy. And I've talked about umbrellas. They are really an inexpensive way to protect your assets and get higher liability coverage. For example, suppose a boat policy provides $300,000 of liability coverage and the owner also has a $1 million umbrella policy. And usually umbrella policies start at $1 million. You can go higher. Sometimes they're in increments of 1 million, 5 million, and then 10 million. If a covered claim exceeds the boat policy's limit, the umbrella may provide additional coverage after the underlying limits are exhausted. However, umbrella coverage is not an automatic simply because the owner purchased an umbrella. The boat must also usually be disclosed. So the boat has to be disclosed and rated for on that umbrella policy. The carrier may require the boat to be specifically scheduled. The carrier may require the underlying boat policy to carry certain minimum liability limits. Again, I've discussed this before. Usually, even for umbrella policies, they require certain liability limits be carried under for the underlying policies. For example, like a homeowners policy, a lot of carriers require that you have 300,000 of liability limits coverage. So if you get a homeowners policy and you have 100,000, and you get an umbrella policy and it says you got to have 300,000 before the umbrella can be paid out, you're going to have a gap of 200,000 that you're going to be responsible for before that umbrella policy will kick in and pay anything. It may restrict specific vessels types. It may exclude boats above a certain size. It may exclude high performance boats. Those are like the fast boats, the speed boats. It may require all operators to meet age and experience requirements. It may exclude commercial use, racing, charter activity, or certain navigation territories. That last point is very important. An umbrella is not magic insurance dust that automatically settles over every vehicle, property, boat, jet ski, rental house, dog, golf cart, recreational activity a person happens to own. The carrier needs to know what is being questioned, or what you're requesting to be covered. So suppose someone purchases an umbrella policy when they own no boat. 2 years later, they purchase a 28-foot vessel but never notified the agent. The underlying boat policy may respond. The umbrella company may then raise questions about whether the newly acquired boat should have been disclosed. Now suppose the insured disclosed the boat, but the boat policy carried only 100,000 of liability coverage when the umbrella required 300,000. I just discussed that. Now you have a gap, and that gap matters. The umbrella may require the insured to absorb the difference between the minimum required limit and the limit actually purchased. That is very, very expensive to discover after a claim. Again, you got to be proactive. You don't want this stuff to come on you after a claim or when you really need it. You need to be proactive and check your policies. A serious injury or death or unaliving can create a claim worth far more than a basic liability limit. The claim may include final medical expenses. It may include funeral expenses. It may include lost future income. It may include loss of financial support. It may include loss of companionship. It may include pain and suffering experienced before the person became deceased. Depending on the law and facts, it may include legal expenses. It may include multiple claimants. A young person may have decades of expected work life ahead. Economists may be questioned or required to kind of weigh in on the estimated future earning capacity of the person. Medical experts may testify. Accident reconstruction experts may be hired. Marine safety specialists may become involved. Attorneys may spend years litigating the case. $100,000 liability limit can disappear quickly. A $300,000 limit can also be insufficient. That is why umbrella insurance is not only for wealthy households. A middle-income family can face a large liability claim. The question is not simply whether you have millions of dollars in the bank. The question is whether an event could create a legal judgment larger than your underlying coverage. Owning a boat and regularly carrying passengers and increases the possibility of a severe claim. Weather-related accidents can result in someone becoming deceased, traumatic brain injury, spinal injury, amputations, permanent disability, or multiple injuries at the same time. The severity makes adequate limits important. The boat owner does not necessarily have to be physically operating the vessel for insurance questions to arise. A claim may examine whether another person had permission to use the boat. It may examine whether the boat was maintained properly. It may examine whether the owner provided required safety equipment. It may examine whether the owner knew the operator was inexperienced, impaired, reckless, unlicensed, or otherwise unsafe. A legal claim may include negligent entrustment. Negligent entrustment is a theory that may arise when an owner allows someone to use dangerous equipment despite knowing or having reason to know that the person is not capable of using it safely. Again, I am speaking generally. I am not alleging negligent entrustment in the Nolan Wells case. Imagine that a boat owner allows a responsible and experienced adult to operate a properly maintained vessel. An unexpected mechanical failure occurs without warning. That situation may not support negligent entrustment. Now, imagine an owner hands the keys to someone who has never operated a boat, appears heavily intoxicated, has previously caused boating accidents. That presents a very different analysis. An insurer may therefore investigate the owner's relationship with the operator. It may question the operator's experience. It may review prior accidents or violations. It may question whether the owner observed alcohol or drug use. It may question who had the keys. It may question what instructions were provided. It may question whether the operator completed a safety course. It may examine whether the owner had reason to believe the trip would be unsafe. The owner may face allegations even without being present. Whether insurance covers those allegations depends on the policy and the nature of the conduct. Boating and alcohol are often discussed together because recreational outings may involve drinking. I'm not making any statement about the Nolan Wells case. This is a general insurance discussion. A carrier investigating a serious boating incident may request toxicology results or question witnesses about alcohol and drug use. The legal effects vary. Negligent or intoxicated operation may support liability against an operator. However, the existence of intoxication does not automatically answer every insurance question. Some liability policies may still defend an insured accused of negligence involving alcohol. Other exclusions or legal limitations may apply depending on the policy and jurisdiction. Intentional conduct is treated differently from negligence. Criminal charges may affect the case, but a criminal allegation does not automatically eliminate civil insurance coverage. The exact wording matters. A policy may exclude injury expected or intended by an insured. Intended. That exclusion is not identical to an exclusion for illegal conduct. Some policies contain criminal acts exclusions, others do not. So basically insurance is there to cover accidental things. It's not there to cover someone intending to go to do something to someone else or cause a certain damage. That's not what insurance is for. Some exclusions also apply only after a conviction. Others may be broader. That is why general statements such as insurance never covers anything illegal are unreliable. People receive traffic tickets during covered auto accidents every day. The fact that a law was violated does not always mean the insurance disappears. The question is what the policy excluded and what conduct caused the injury. That is a That's so true, because for auto accidents, you may hit someone and then you get a ticket for following too closely, but the insurance company still pays out for it because you were at fault for the accident. Insurance is generally intended to cover accidents and negligence, not deliberate harm. Most liability policies contain an exclusion for bodily injury or property damage that is insured expected or intended. The purpose is straightforward. A person should not be able to intentionally harm someone and then transfer the financial consequences to an insurance company. However, cases become complicated when a lawsuit includes several theories. A complaint, a complaint may allege intentional conduct. It may also allege negligent supervision. It may allege negligent hiring. It may allege negligent entrustment. It may allege failure to render aid. It may allege negligent maintenance. Some allegations may fall within coverage while others do not. An insurance company may agree to provide a defense under a reservation of rights. A reservation of rights letter means the carrier will provide a defense while preserving the right to deny payment for claims that ultimately will be excluded or can be excluded. That letter can be confusing. The insured may think the company hired an attorney, so everything must be covered, not necessarily. The carrier may be defending because at least one allegation potentially falls within the policy while questioning a court to determine whether it must pay any final judgment. Insurance litigation sometimes becomes a lawsuit inside another lawsuit. There may be the underlying wrongful unaliving case. There may be a separate coverage case between the insured and the insurance company. By that point, everyone has an attorney. The attorneys have attorneys, and the policy definitions are working overtime. Liability policies often include a duty to defend an insured against covered lawsuits. The duty to defend can be broader than the duty to pay a judgment. A carrier may have to provide a defense when the allegations potentially fall within coverage, even if the facts are later shown to be different. The insurer may appoint defense counsel. It may pay attorney fees and litigation expenses subject to policy terms. Defense costs may be paid outside the liability limits under some policies. Under other policies, defense expenses may reduce the amount available to pay damages. That distinction matters greatly in a long case. Suppose a policy has $500,000 of liability limits. If a defense costs are outside the limit, the company may spend $200,000 defending the case and still have up to $500,000 available for settlement or judgment. If defense costs erode the limit, that same $200,000 could leave only $300,000 for the claimant. Boat owners should question how their policy handles defense expenses. Most people do not ask the question or do not question when buying insurance. They question the price. They question the deductible. They may question whether towing is included. They rarely question whether legal defense costs reduce the liability limit. Unfortunately, the claims department will know the answer even if the customer never questions it. Families sometimes confuse accidental unaliving insurance with liability insurance. They are very different. And I have to use the unalive word because I believe YouTube doesn't like the other word. So I'll use unalive. A liability policy depends on whether an insured person is legally responsible for the injury or unaliving. An accidental unalive policy pays a stated benefit when the insured person becomes deceased as the direct result of a covered accident, subject to the policy's definitions and exclusions. No other person necessarily has to be negligent. Suppose an insured person suffers a fatal accidental fall with no one else at fault. A liability claim may not exist. An accidental unaliving benefit may still be payable. Accidental unalive coverage is often sold as a separate policy or included as a part of an accidental unalive and dismemberment plan. It may also be provided through an employer. A school or athletic organization may offer coverage. A credit union or bank may provide limited accidental unalive benefits. A credit card may include travel accident coverage under specific conditions. A membership organization may include a small benefit. These policies often contain exclusions. They may exclude or limit benefits involving illness, disease, intoxication, certain hazardous activities, criminal conduct, self-inflicted injury, or unaliving occurring outside specific circumstances. The company may require proof that an accident was the direct and independent cause of the unaliving. If the cause and manner of an unalive remain undetermined, an accidental unalive carrier could wait for additional investigative and medical findings before making a final determination. A delay does not necessarily mean the company has denied the claim. It may mean the carrier does not yet have enough information to determine whether the unalive meets the contract's definition of an accident. The carrier may issue a letter requesting the final autopsy report, toxicology results, law enforcement findings, and certified death certificates. Shouldn't have said that word. The family may feel frustrated because the company appears to be asking for documents that do not yet exist, but the insurer cannot change the manner of unalive from undetermined to accidental on its own. Traditional life insurance works differently from accidental unalive coverage. A life insurance policy generally pays the benefit when the insured becomes unalive, while the policy is subject to while the policy is active and subject to the policy's conditions and exclusions. The unalive does not always have to be accidental, by no means. Traditional life insurance may cover the unalive caused by illness, natural causes, or an accident. The company normally requires a claim form and a certified unalive certificate. It may request proof of identity from the beneficiary. It may question or request for tax information. It may question how the beneficiary would like to receive the proceeds. In an unusual or actively investigated unaliving, the carrier may request law enforcement reports, autopsy findings, medical records, toxicology reports, or court documents. If the policy was issued recently, the carrier may conduct a contestability review. The contestability period is commonly 2 years from the policy's issue date, although exact rules vary. During that period, the company may review the original application to determine whether material information was inaccurate or omitted. For example, the carrier might review medical records, tobacco use, dangerous activities, or other underwriting information. A contestability review does not automatically mean the policy will be denied. It means the carrier is confirming whether the policy was issued based on accurate information. A life insurance company does not necessarily need a criminal case or civil lawsuit to be completed before paying the benefits. However, unresolved facts may delay payment when the manner of unaliving affects a policy provision or when there is uncertainty about the proper beneficiary. Life insurance of all the insurances usually will pay out the quickest. Again, long as it's not a recent policy that was taken out and it's within that contestability period. But if you've had the policy for a while it usually, you provide the unalive certificate because we're on YouTube, and it usually pays out really quickly from there. You'll have a check so really quick. So it doesn't, in no other circumstances, and again, unless it's kind of a questionable, like if it's taken of your own life, that may become an issue, depending on the policy languages. But again, usually life insurance is pretty quick to pay out, as long as it's not within the contestability period. The named beneficiary is the person or organization designated to receive the life insurance proceeds. That sounds simple until it is not. The policy may name one person, it may name several people. It may name primary and contingent beneficiaries. It may name a trust. It may name the insurer's estate. A beneficiary may have passed away before the insured. A beneficiary designation may have been changed recently. Family members may dispute whether the change was valid. The beneficiary may be a minor. The beneficiary may not be legally able to receive funds directly. The policy owner and insured may be different people. The beneficiary designation may conflict with a divorce decree or court order. These issues can delay payment. When the beneficiary is a minor, the insurer may require a court-appointed guardian, custodial agreement, or another legally authorized method for holding the proceeds. When beneficiaries disagree, the insurer may file an interpleader action. An interpleader allows the company to deposit the policy proceeds with the court and have the court determine who should receive them. The insurer is essentially saying, we know the money is payable, but we are not choosing sides in this family dispute. That may protect the carrier from paying the wrong person twice. It also means the beneficiaries may need attorneys and court involvement before receiving the money. Always, every year, I would say, when you have your life insurance, review your beneficiaries. A lot of times we take out those policies and we just let them ride. We never go back to review. So always review, because you may have named, if you didn't have kids when you took it out, you may have named your parents, and your parents may now be deceased. So now you need to update those beneficiaries and change it. So always review your beneficiaries. Most states have laws that prevent someone from financially benefiting from intentionally causing the insured's passing away or unaliving. There are sometimes these are sometimes called slayer statutes or slayer rules. I am not suggesting that this issue applies in a Nolan Wells case. This is generally an explanation of why life insurance companies may delay payment when the beneficiary involvement in a death or unaliving, I keep forgetting, is being investigated. Suppose the named beneficiary is suspected of intentionally causing the person's unaliving. The company may wait for additional findings. It may file an interpleader action. It may pay the proceeds to a contingent beneficiary or the estate if the primary beneficiary is legally disqualified. The standard used in a civil proceeding may differ from the criminal standard. A person may not be convicted criminally, but could still face a civil determination affecting the insurance proceeds, depending on state law. The life insurer does not want to pay someone who may later be ruled legally ineligible. At the same time, it should not permanently withhold benefits from an innocent beneficiary without a valid reason. That creates a difficult balance. Young adults may have coverage that families do not immediately know exists. An employer may provide basic group life insurance. A parent's employee benefit plan may offer dependent life coverage. A school may sponsor accident insurance. An athletic program may provide limited benefits for injuries connected with official activities. A student organization may have event coverage. A bank or credit union may offer complimentary accidental unalive insurance. A credit card may provide travel benefits. A membership organization may include a small unalive benefit. A family reviewing possible coverage should examine employment documents, school records, bank statements, email messages, benefit enrollment records, and reoccurring charges. They should look for insurance premium deductions. They should contact human resource departments. They should question whether the individual was covered as a dependent. They should review any student insurance programs. These benefits may not be large, but several small policies can still provide meaningful assistance when funeral expenses, travel, debts, or family needs. The difficulty is not these policies may not be obvious. The difficulty is that these policies may not be obvious. No large insurance folder may exist. The coverage may have been accepted electronically. The beneficiary may not know about it. This is why organized financial records matter. A policy no one knows about cannot help until someone finds it. A traditional life insurance benefit can be used for funeral expenses. Although the money is paid to the beneficiary rather than directly assigned to a specific purpose, unless an assignment is arranged. A final expense policy is a type of life insurance generally designed to provide smaller benefits for funeral costs and other financial obligations. A boat policy's medical payment coverage section may include limited funeral benefits in some forms. An accidental unalive policy may provide a lump sum benefit. A liability settlement may later include funeral expenses if another person is legally responsible. However, liability claims can take time. Families often need to make funeral arrangements before liability is determined. The funeral home may accept an assignment of a portion of life insurance proceeds. That means the beneficiary authorizes the insurer to pay an agreed amount directly to the funeral provider. Families should review the assignment carefully. They should confirm the amount. They should understand whether fees are involved. They should avoid signing documents they do not understand during an emotionally vulnerable time. Grief makes paperwork more difficult. Unfortunately, insurance and funeral arrangements create a great deal of paperwork precisely when families are least prepared to handle it. A trusted relative, attorney, financial professional, or experienced insurance professional may help organize the process. If evidence ultimately supports the conclusion that another person or organization was legally responsible for Nolan Wells's unaliving, the family could potentially explore a wrongful unalive claim. A wrongful unalive claim is a civil action. It is separate from a criminal investigation. A criminal case is brought by the government and may seek punishment. A civil wrongful unalive case is generally brought by legally authorized family members or the estate and seeks financial compensation. The fact that no criminal charges are filed does not automatically prevent a civil claim. The standards of proof differ. A criminal case generally requires proof beyond a reasonable doubt. A civil case generally uses a lower standard, often described as a greater weight or preponderance of the evidence. That means civil responsibility may be established even when criminal guilt is not. Depending on the applicable state law, damages may include medical expenses, funeral expenses, lost future financial support, loss of household services, loss of companionship, emotional losses recognized by law, and other damages suffered by qualifying survivors or the estate. The law determines who is allowed to bring the claim. It may be personal representative. It may be a parent, spouse, child, or other survivor. The rules vary by state. Because the incident occurred near Mississippi waters, jurisdiction and maritime law issues could become important. I'm not offering an opinion about which laws applies. That is a question for attorneys familiar with the facts, location, and relative state and federal law. Boating incidents can involve legal rules that differ from ordinary land-based accidents. The location of the incident matters. Was the event in state waters? Was it in navigational waters? Did federal maritime law apply? Was the vessel traveling between locations? Was the boat used recreationally or commercially? Which state has jurisdiction? Where do the parties live? Where was the boat registered? Where was the policy issued? Where, where was the lawsuit filed? These questions can affect deadlines, legal duties, available damages, insurance coverage. A person may assume that the law of their home state automatically controls. That may not be true. An accident in another state can create multiple state issues. An event on navigational waters can create federal maritime issues. Insurance companies may hire attorneys who specialize in maritime liability. A general personal injury attorney may also consult maritime counsel. This is another reason not to assume that a boating claim will be handled exactly like a car accident. Both involve liability insurance, both involve negligence, but the legal framework can be very different. Boat policies often contain navigation limits. A policy may cover the vessel only when certain geographical areas. It may allow operation on inland lakes and rivers. It may permit coastal waters within a certain distance from shore. It may cover the Atlantic and Gulf Coast within specified boundaries. It may exclude international waters. It may require an endorsement for trips to the Bahamas. It may restrict operation during certain seasons or in certain regions. If a boat travels outside the approved territory, coverage questions may arise. For example, a policy written for inland use may not be designated for offshore travel. A policy that permits coastal operation may still impose mileage limits. A carrier may question where the vessel traveled. GPS data, navigation records, marine receipts, and witness statements may become relevant. Boat owners should not assume that insured in Florida means covered anywhere water exists. The ocean is large. The policy territory is usually smaller. Before taking an extended trip, the owner should confirm that the intended route falls within navigation area. If a person receives medical treatment before the unaliving, health insurance may initially pay certain expenses. The health insurer may later seek reimbursement from a liability settlement. This is called subrogation or reimbursement. Government programs may also have recovery rights. Medical providers may file liens. The final settlement may need to account for those claims. For example, suppose health insurance pays $100,000 in emergency and medical bills. The family later receives a liability settlement. The health plan may claim a right to recover some of what it paid. The exact amount may be negotiated or limited by law and contract. This means the settlement amount is not always the amount the family ultimately receives. Attorneys' fees, costs, medical liens, and reimbursement claims may be deducted. Insurance claims involve layers. The boat carrier may pay, the health insurer may seek reimbursement, a life insurer may pay separately, an accidental unalived policy may pay separately, a funeral assignment may be deducted. The estate may have obligations. A good attorney and accountant can help track these moving parts. Insurance cannot replace safety. People sometimes purchase insurance and feel protected. They are financially protected against certain covered losses. That does not mean the risk has disappeared. Auto insurance does not make speeding safe. Homeowners insurance does not make candles safe near curtains. Boat insurance does not make an untrained operator safe in dangerous water. Insurance transfers some financial risk. It does not remove physical risk. This is why agents should discuss safety as well as coverage. We want policies to respond when needed. We would still prefer that the claim never happened. No agent wants to receive the call that someone has passed away. No adjuster enjoys opening a fatality claim. No family wants to learn policy definitions during the worst week of their life. Prevention always comes first. After a serious boating incident, safety and emergency response comes first. Contact emergency services. Provide accurate location information. Cooperate with law enforcement. Seek medical attention. Then preserve information. Write down names and contact information. Photograph the boat and scene when it is safe to do so. Preserve phones and original files. Save messages. Save receipts. Save the vessel registration. Save insurance policies. Do not repair or dispose of the boat until investigators and insurers have had an opportunity to inspect it. Notify the appropriate insurance carriers. Request certified copies of official documents when available. Contact life insurance companies. Contact employers and schools about possible benefits. Consider speaking with an attorney in a fatal or catastrophic case. Organize documents in one place. Designate one family member to track communications. Grieving families can become overwhelmed when several insurers, agencies, attorneys, medical providers, and funeral professionals are calling at once. A simple written log can help. Record the date, record who called, record the claim number, record what documents were requested, record the next steps. You do not need an elaborate system. A notebook or spreadsheet is enough. The goal is to prevent important information from disappearing in the chaos. All right, here are my final thoughts. The Nolan Wells case is heartbreaking because a young man left home for what should have been an ordinary summer outing and did not return. His family is waiting for answers that no insurance policy can provide. Insurance cannot determine the full truth by itself. It cannot replace a child. It cannot erase grief. It cannot restore the future a family expected to share. It cannot give back missed birthdays, graduations, holidays, conversations, and family moments. What insurance can do is provide a structured process for investigating claims. It can pay covered expenses. It can defend insured parties. It can compensate surviving family members when legal responsibility is established. It can provide financial support through life insurance or accidental unalived benefits. It can preserve assets for a household facing a large legal claim. It can help families by pay immediate obligations. It can provide access to attorneys and experts. Whether any particular coverage applies in the Nolan Wells case will depend on facts that remain under investigation and insurance policies that have not been made public. Until those facts are established, the responsible thing is to avoid speculation. Allow investigators, medical professionals, attorneys, insurers, witnesses, and the family to continue seeking answers. We can educate ourselves without making accusations. We can improve boating safety without pretending to know what happened. We can review our insurance without turning someone else's grief into entertainment. And we can remember that behind every headline is a real person and a real family. If today's quick bite helped you understand, which this one was not quick by no means, but if it helped you understand how boat insurance, homeowners liability, renters liability, umbrella coverage, medical payments, uninsured boater coverage, life insurance, accidental unalive benefits, wrongful unalive claims, and insurance investigations can become involved after a tragic boating incident, then that is exactly what I hope to accomplish. Insurance policies and liability rules often become important during the most difficult moments a family can experience, which is why understanding your coverage before an emergency matters. If you own a boat, regularly operate someone else's boat, rent boats while traveling, or take friends and family out onto the water, please review your insurance coverage and safety procedures before your next trip. Do not assume your homeowner's policy covers the boat. Do not assume your umbrella automatically covers every vessel. Do not assume everyone knows where the life jackets are. Do not assume someone else completed the head count. Preparation always beats assumption, especially on the water. If you would like to review your current policy or request a quote, please visit our website at at www.isominsurancegroup.com. There is no the. www.isominsurance.com. Oh, group. Let me redo that all over again. www.isom, I-S-O-M as in Mary, insurance, I-N-S-U-R-A-N-C-E, group, Group.com. Preparation always beats regret. If you found this episode educational, please like this video, share it with your friends or family, drop a comment below answering today's question. Before watching this episode, did you realize that your homeowner's policy might not provide adequate liability coverage for your boat? And have you confirmed that your umbrella policy includes any watercraft you own? Quick Bite episodes drop every Saturday at 2 p.m. Eastern. This one will be a little bit late today. This video is for educational purposes only and should not be taken as legal, tax, financial, investigative, boating safety, or specific insurance advice. The Nolan Wells investigation remains ongoing, and this episode does not make any determinations regarding the cause of unalive, fault, liability, criminal conduct, or available insurance coverage. The insurance policies and complete investigative records involved have not been made public. Please consult a licensed insurance professional, qualified attorney, and appropriate boating safety professionals regarding your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching. I hope you have a wonderful and safe weekend. I'll see you next Saturday for another Quick Bite episode, which will be a lot shorter. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.